We're going to cover elections today, and we're going to cover the months leading up to the elections. August, September, October. Ready?
Ready.
Okay. Months leading up to the election. Do you think that there's some kind of trend that we should know about? August, September, October.
You know what? I think it's almost like a buy Rosh Hashanah, sell Yom Kippur, or sell Rosh Hashanah.
What does that mean?
Buy Yom Kippur.
Okay, what does that mean?
We have these sayings out there in the market that I don't think have ever been really tested, tried and true, and you have enough of the...
Okay, so what are you saying? August, September, October.
It's like every other Monday, Tuesday, Wednesday, Thursday, Friday. I think it's going to be random. I don't think there's going to be any kind of trend or something to follow here. Maybe there's a volatility thing, but I don't even think even that's going to have anything to do with it.
Octobers have been crazy throughout.
Same as it ever was.
Octobers have been crazy throughout history.
Yes, it has.
But they've been crazy for reasons other than elections. 1987, the crash was in October. No election. 1989, the mini crash was in October. No elections.
There were elections looming, but no.
Well, not really. In the point being is that we rarely see election activity move the market. 2008, we were in the middle of a meltdown, so that was an election thing. And then I would say in 2016, the market definitely ran up after the 2016 election, but in October, it was a little weak prior to it. So let's see if we can come up with anything that looks really interesting. Being an election year, implied volatility has remained quite average so far, with an overstatement rate of 86% over the last 12 months. All right, that sounds... Here's the S&P's historical volatility. Here's the S&P's implied volatility. You can see the implied volatility has overstated. You know, generally speaking, the implied volatility is overstated. But I think that's what you're looking there is a pretty normal chart of implied over historical. What should we expect in terms of price volatility and implied volatility in the months leading up to a presidential election? How typical was August and September compared to past election years? And how does the volatility compare to any other year? We're going to see. So we went all the way back to 2000. We looked at the SPX and the VIX. I think the VIX started trading on the VIX just after 2000. So that's about as far back as we can go. We observed the days in August, September, October in presidential election years in 2000, 04, 08, 12, 16, 20. We computed everything you wanted, everything you ever wanted to know and more about historical volatility, implied volatility, price change, monthly price variation, and then compared to the same months in non-election years. Here we get into the meat. Are you ready? Right. August and September of election years tended to exhibit average implied volatility, but low historical volatility. This suggests that the actual price volatility was significantly muted despite an election coming up. That is your first big takeaway. Initially, the numbers suggest that price volatility was muted despite an election. October before elections were more volatile than August and September, although 2008, was a large outlier that may have thrown everything off. Because 2008, if you remember 2008 of October, volatility ran up to about almost 80. And that messed up like historical numbers forever. But you can see here that normal election years average implied volatility, historical implied volatility are pretty much in line. And October is different. Again, 2008 really messed up that skew, is what it is. The actual average monthly price variation was so small back then, it's surprising to me. The average price changes for the month leading up to the election seem to suggest that August was a strong bullish month and September and October were very bearish. However, the variation is also very large. This means there is no statistical evidence to any directional trends that may be observed. That's pretty interesting because when you think about it, August, very bullish. September and October, very bearish. This is since 2000. Again, a lot of this is skewed in 2000 and 2008, but it is what it is. And the monthly price variations obviously go up. Interesting stuff. For non-election years, August and September are actually more volatile than election years. That's all you need to know. For non-election years, August and September are actually more volatile than election years. A non-election October was less volatile and was very similar to August and September. Even when comparing to election years, the volatility difference between these months is quite insignificant. And that is really the key here. When you go to the non-election years, it's basically no change. I think this would be more about, let's talk economic meltdowns than election years.
Yes, right.
Okay. Yeah, because I think that's the big difference. The monthly price variation is larger than the size of the average, meaning there is no directional trend in any month. This was a really critical takeaway for us. And again, for a long time, we wanted to do this study. We looked at non-election years since 2000, and you can see here the average monthly price change and then the average monthly price variation. I don't think that there is much in there that suggests anything different from some of the takeaways from this very extensive study When looking at expectations for implied and realized volatility for August and September, the presence of an upcoming election presented very little difference. So a lot of the talk about the elections, again, very little difference.
So
Very little difference.
what did you, I should have asked, what do you think? From these results, do you change any of your
No,
business as usual? Doesn't mean
business as usual.
For
It's
you.
almost like you're trading an earnings play. It's business as usual up until, the earnings.
Sure.
October in election year was more volatile on average, but not because of the election itself. The capitulation in 2008 occurred mostly in October and was the main contributing factor to the higher average. Bottom line, there is no significant directional trends in any month, regardless of an election.
Ba-dum-bum.
Yeah.